Hello, everyone. Welcome to our third webinar, M&A Beyond Borders, Accelerating Growth, Efficiency, and Excellence. This episode is a part of the webinar series dedicated to the Global Energy Week, which will take place in London on the 27th, 28th, and 29th of June. Today, we have the privilege of introducing our two guest speakers who will be sharing their insights and expertise in the field of energy and M&As. Please join me in welcoming Victor Munoz, operating partner Latin America at Denham Capital Management, and Malcolm Graham Wood, founding partner and executive chairman of Hydrocarbon Capital Limited. So before we delve into details of the webinar, let's get to know our speakers a bit better. Victor, could you please share with our audience a bit overview of your background and expertise to start with?
Thank you, Nadia. First of all, it's a pleasure to be here, and it's a pleasure to be preparing for the Global Energy Week in London next month. I'm sure it's going to be an extremely productive event. I'm Victor Munoz. I am Colombian American, and I've worked in investments for 20 plus years. Most of the time with Denham Capital. I focused on infrastructure, on mining, and particularly in what we call our sustainable infrastructure group, that is focused on renewables and in things like infrastructure for electric vehicles, data centers, etc. Over the years, I focused my career particularly in Latin America. I've participated in the deployment of more than $1.2 billion in countries like Brazil, Uruguay, Chile, Peru, and Colombia. So it's a pleasure to be here.
Thank you so much. Malcolm, could you also please share with us a bit of your background?
Yeah, good morning. And I echo Victor's comments about the summit in June and look forward to participating. I've been in the oil industry, oil and gas, oil transition, energy, now whatever you like to call it, business for over 40 years, ever since I started as a trainee at Wood Mackenzie. Ever since then, I've done investment banking with James Capel and HSBC and a number of other positions in institutional equity sales, and in the last 15 years or so, I've run my own international consultancy in the business, based almost exclusively with energy companies, oil and gas, but moving nowadays more onto, into different parts of the field, but very much still the old school, which I should remind people who think that fossil fuels are coming to an end quite soon. Not only isn't the case, but it's what has caused a number of problems in the marketplace because people think it is going to be the case. So there we go. Looking forward to being chatting with Victor and yourself.
Great. Thank you so much. And also thank you for finding time for us today. So we have gathered a couple of questions for both of you, and it's really valuable to hear your perspectives on different sides of the energy industry, renewables and hydrocarbons. So I also encourage our viewers, by the way, to go ahead and post their questions in the comment section in the meantime. But we can start with the first one. So with your extensive expertise in the energy industry, what do you consider to be key factors that drive successful M&A deals in energy sector, in oil and gas sector and renewable energy sector? So if we could start with Victor, and then Malcolm could take over to talk about more about oil and gas.
Yeah, this is a very interesting question, and I always like to point out three specific factors that I think bring a lot of value in the creation of good transactions. The first one is origination. There's transactions everywhere. If you look in every country, somebody's selling assets, there's an opportunity to invest, to develop. So the question is, how to identify the good transactions with lower risk? And when you look at good transactions, you're thinking about opportunities where your risk is lower, but at the same time, that your investment or what you pay to enter that opportunity is a reasonable amount that would lead to good returns. And that is not necessarily easy. Then all of the transactions that you go around are not necessarily good transactions. So it is important to have a network, people in your entity, in your firm, who are experts in identifying that kind of transactions, who have extensive networks of contacts that will allow you to either go first to a transaction or identify things that are not in market yet. Look, I've been an investment banker before, and I think investment bankers play a very, very important role in transactions. But when you're only waiting for investment bankers to bring you transactions, you're left with a universe of opportunities that are highly competitive, and then making your returns could be more difficult. So that's why, again, identifying good transactions through your own network, what we call proprietary deal flow, is one of the key aspects of the business, at least from our point of view as investors. The second thing is you need to have a strategy to create returns, to make your transactions more valuable. Whether it is you have a strategy to cluster several assets and then take advantage of synergies, reduce expenses, etc., and extract more value out of it. Whether it is in renewable energy to create hybrid parks, wind park combined with a solar park that share infrastructure, therefore your returns are better. Whether it is a strategy of having key people on the ground that will allow you to execute better and bring better returns, whatever it is, in addition to identifying good transactions, good origination, you need to have a strategy that will allow you to increase those returns. And then finally, it might be obvious, but sometimes it's not. You have to have a very good negotiating team. In the end, a transaction on the ground might be very good. You might have found a great asset. You might have found be able to locate or pay a good price for it. But in the end, it all will be affected as well for the terms of the transaction. It's not only the price, but the terms. So negotiating a good deal, everything related to representations, warranties, covenants, etc., how you allocate the risks, buyer, seller, is extremely important. So in summary, origination is key. Identifying good deals is not easy. There's deals everywhere. So you have to have the skill of identifying proprietary good deals. Two, you need to have a strategy to create more returns because this is a competitive world. And three, have a very good negotiating team in order to close your deals.
Great, thank you so much. Malcolm, would you add anything and elaborate the topic on the oil and gas side?
Well, yeah, I mean, I think that, thank you, Victor, that we're both certainly thinking along the same lines. Over the 30 or 40 years that I've been involved in doing transactions, they are key, those sort of things. I would say that as a company, if you're in moving into the M&A world, you need to be adding to your own company's size. It's your own efficiency and excellence, and that is because you're doing it through M&A. It means it's not something you can produce organically within your own company. Your company may be in great form doing that organically, but you want to grow faster and take advantages of opportunities. And again, Victor's dead right. I mean, at any one stage, there are always opportunities in the market, and again, you should indeed be you should be aware of what's going on. Not always expecting. I've been on the back of investment banks finding things, and also working with companies where they find them themselves. Companies are generally pleased, or more pleased, when they found the deal themselves, and I'm quite right too. They've presumably got a bunch of people at headquarters, identifying those things which are, a competition to them, or just an attractive package of assets which is too cheap and you would be able to make more valuable. So the identification of the target, exactly like Victor, identifying a shortlist in the same way, and then basically, working out how you're going to do it. Most of the companies that are successful at doing these deals have worked out the way to play it, and the size, and so on. So, at which stage your team and your senior management are going to be bringing in help, whether it needs help in funding, whether it needs help on the legals, which it always does. We'll come back later, I'm sure, to things that cause problems, but legals deciding whether you need all the things like ESG, which we'll come back to, and sustainability. But more importantly, in my part of the world, people are normally talking about buying a portfolio of assets which will enhance your own business.
Thank you. Malcolm, in your opinion, what are the major challenges and opportunities for M&A transactions in the energy sector on a global scale today, and how companies can overcome those challenges?
Well, there are challenges every step of the way, to be honest, and they start with the management itself. A management might be looking at an acquisition or picking up some portfolio assets, and they just find that it's not possible, partly because of maybe size, partly because of the legals of it, and partly because in the end you've normally got a shareholder base to report to, and it's very important that that when you go back to a shareholder base and say we are planning to do this, they're with you. That is something which is normally has to be sorted out before you start getting involved, and you can do that. There are obviously the usual challenges that I would expect, like legal challenges which crop up all the time. But in the end, it's always about price, about value, and about the accretive nature of it. So put those factors together and say you have to know what you are going to pay for an asset, and the challenge would be not overpaying for it. During the process of working through the asset deal, you may find that there is more in there than you expect, but not overpaying for what you thought of, and to make sure that either at the value, the asset value level, or at the earnings per share level, that you're buying an asset which is accretive to your shareholders and not dilutive. It's very easy to do a bad deal because you're buying something. It's highly diluted because you're issuing shares, and you come out of it with a fall in earnings per share, which shareholders will not thank you for. So the biggest challenge, overpaying, probably taking time, having difficulty on the legal front. I think that once you've sorted out those key problems and you've bought a good asset, nice and good value, and you've done the deal swiftly, and it's accretive to your business, you've done well.
Thank you. And you, Victor, what other challenges can you highlight? And also, if there is a universal advice that you could offer to companies seeking to optimize their M&A strategies and navigate in those challenges and complexities, what this advice could be?
I think you got to focus, and you have to identify the areas where you want to play. The world is a real large place, and trying to do a deal in Europe one day and another day in Asia, and then go to Latin America or to North America could be a little bit distressing. So I'd say you are to focus, and within that focus, identify the opportunities and of course the challenges at the same time. And I'd like to mention a little bit of what I see around the world in the part of sustainability and renewables. Europe today is offering a lot of opportunities as a result of the invasion of Ukraine by Russia. That's put a lot of pressure in decreasing and eventually eliminating the dependence of hydrocarbons from Russia, of Europe. And so it's bringing opportunities for renewables, for sustainability. In the US, if you want to focus there, you have the Inflation Reduction Act that is bringing a lot of resources, opportunity, money, that is enabling many, many deals. That's another area where you can focus. And once you focus there, you can also get into the different challenges that has to do business in that specific environment. I myself focus on Latin America. I think the opportunities in the renewables and sustainability in the area, I would summarize in like number one right now is investing in distributed energy, distributed generation in Brazil. Most of the money is going there because there's plenty of opportunities and the returns versus the risk are actually very attractive. Then we have Chile. Chile, for the first time, is getting to the point where solar installed capacity is surpassing what historically was the largest capacity of all the hydro opportunities that were there. We have countries like Colombia that finally took off in last year, 2022, started to put into operation renewables. After 5, 6, 7 years of trying to do it, finally Colombia has taken up, has demonstrated that it's doable to do businesses there. So you see all those opportunities, but at the same time, you need to look at the potential issues, the challenges. But you do that once you have a focus, right? So you say foreign exchange in Latin America, it's an issue in countries like Brazil and in Colombia, right? Not in Chile, because Chile is a more dollarized industry. Political risk that you barely consider in many European countries or in the US. In Latin America is something that you have to pay attention to. So what I would say is focus, identify opportunities, and then drill down on them. That's going to take you to a better outcome than just jumping on a plane from continent to continent trying to find or pursue the best deal.
Great, thank you so much. So now many energy companies are turning to acquisitions to rebalance their carbon portfolio and to green their operations. How can companies boost the success of such deals, and what should they be careful about? For Victor, I think the question is.
Okay, yeah, I'd say yes, we've seen definitely that trend in the market for several years now. Certainly the concerns with the environment, certainly the wish of attaining the goals of net zero emissions, carbon, are moving many of these firms to start their own green area to offset carbon emission. I'd say two things about it. One, in order to be successful on that, you have to have very clear that you're probably moving into a different business. Let's say you're an oil and gas exploration company who wants to get into renewables. The first thing that you have to accept is this is a completely different business. It's not a business of exploration with the associated risk of exploration that those companies master. This is more of a business of developing new opportunities. The returns and the risk are very, very different. I've been in the oil and gas sector as well. We've done investments of oil and gas in the past, and the returns that you can reach are certainly way higher that you probably can get in developing a renewable facility, a solar facility. But of course, the risks are also very different. The risk of exploration of oil and gas is way, way higher than it would be to build a renewable facility. So having that in mind, knowing that this is a very different business that you're getting into, I would say, first of all, have a very good plan of what you're going to do. And that plan, as any other plan, should start with your goals. What is it exactly that you want to do here? Do you just want to zero out your carbon emissions? That's one business. Do you want to create another area of business? You really want to get into the renewable business? That's a very different goal, right? And can be achieved in a very different manner. Is your view to actually, over the next 50, 100 years, replace your core business from oil and gas to renewables? That's a very different goal. So you need to start with deciding what is it exactly that you want to do, rather than just go out and get some renewables to try to get into the mainstream today of that. And then once you have decided what strategy, what plan is, you need to put the right resources behind it, in terms of money, in terms of people. And people are key, because depending on what the goal is, you're going to need different persons executing that. In many cases, you're going to have to bring experts from the areas where you want to go. You want to go again to renewables, to solar, to wind. You need to have people with that track record, with the knowledge of that sector, etc., and develop again a very clear plan to execute. Then the execution of that plan is, of course, the second phase, where you need to be extremely, extremely careful. I'd say, as an idea in general, if you want to expand your reach into renewables to offset your carbon emissions, the idea of developing platforms works very well, in the sense that a platform, number one, brings you an operational asset that is already working with a lower risk. But platforms most of the time come with pipeline of potential deals that you can execute and grow and be larger in that sector. And platforms normally come with teams of experts, people who have done it before, who have the track record of executing. So I'd say, as part of that plan, as part of having decided exactly what is it that you want to do, considering the investment, the acquisition of platforms could be extremely valuable for those firms. Again, because they bring assets, they bring pipeline for future growth, and they bring people with the knowledge that will allow you to grow, hopefully successfully, in that new area.
Okay. Thanks so much. Malcolm, what do you have to say about M&A's role in rebalancing energy portfolio? What risks and opportunities are there?
Well, I would say that within the energy sector in the actually worldwide, let's look at it. I mean, I can look at it in the UK, but in the main, I would say that there aren't many energy companies that are actually looking to make acquisitions of substantial size in renewables, because they know it's not their game. But there are changes, and take, for example, Chevron only yesterday paid $7 billion for an upstream asset. So that ain't changing anytime soon. More importantly, within the oil and gas companies that I look at, they are moving into a different direction, but via acquisitions, or quite often, more importantly, joint ventures. If you see the service companies, and take, for example, someone like Petrofac, who've been, Petrofac have had their problems in the last 2 or 3 years, but in recent year or so, they've identified some very interesting joint ventures by which they can team up with other major engineering consultancies or companies, and in their case to build wind farm assets, which are, if you think about them, just very substantial offshore assets, as if it was a platform in the North Sea or something else. So they are moving that way by identifying that as part of their business model. And actually, in the oil and gas company side of it, they are doing a number of things. Victor mentioned, there's decarbonisation, yeah, but in fact, lower carbon across the board, starting with new discoveries, but going across the board in terms of anything in terms of acquisition. We're finding that Kistos are highly successful in making their platforms in Holland virtually nil carbon. Jersey Oil and Gas should be given a great deal of plaudits for making the Greater Buchan area. It's going to be a very low carbon area, and a number of people are building new platforms, to use Victor's word, but in my word, it's a question of saying oil and gas platforms which can produce without almost totally unmanned in some cases, sometimes with a cable from onshore, and therefore, so they're building the business by adding on M&As which will bring down their carbon footprint substantially.
Thank you. And as a last question, just to talk a little bit about the energy strategies, Malcolm, what are some investment strategies or areas of focus that you consider promising for investor looking into participating in the energy transition through M&A opportunities and in general in energy sector?
Well, nothing like a big question to finish up with, but I would say that actually the most important guidance is never get fixated on anything too soon. If you saw in the UK, for example, in the last year or two, up till last spring, summer, the companies were very much transitioning towards gas as the fuel of the future, and therefore tending to buy gas assets and wanting to have a higher proportion of gas in that model, and that's not the case as much now, as people realise that oil is, as I said, is here to stay. So that's not going to happen too much. The other thing is that we haven't really touched upon is the political situation, and it's not often that I say that Victor, operating out of South America and Colombia, is in a better fiscal position than the UK, but that's the case. I mean, number of companies that have been looking at acquisitions in the UK North Sea and the West of Shetlands has found that they've just been unable to make those acquisitions because the political situation is significantly worse than they thought, and it's because of the uncertainty, and they're not doing that. There are always, again, as Victor said at the beginning, there are always plenty of opportunities, plenty of deals to be done for the small and mid-cap companies that I tend to look at. There's a host of stuff coming off the majors to be able to pick up on. Jadestone has found that in the Asian region and so on. But even for the bigger ones, you get to someone like Chevron, and they can still find a 7 billion acquisition in literally in onshore hydrocarbons. So I think that we've talked about the challenges that are there. We talked about the trends and what people are doing, but I would say that for the oil and gas companies, that they are sticking to their knitting and making these M&A options where they think they can buy accretive, inorganic companies that will add to their own value.
Thank you, Victor. What about you? What promising areas of focus would you highlight for investors?
In the renewable, sustainable area, I think, and I mentioned this before, the U.S. right now is certainly an area where, as a result of the Inflation Reduction Act, there's many opportunities to be looked at. And I want to emphasize that basically three things: wind, for sure, the U.S. is offering great opportunities; solar generation, and green hydrogen is another area. It's more nascent, but I think green hydrogen will present interesting opportunities in the U.S. In Latin America, I'd say today, by far, the largest opportunity is solar. and solar, particularly in Brazil, in distributed generation, is certainly the largest opportunity. If you look at the statistics, the amount of money directed to solar distributed generation in Brazil is larger than all the other capital directed to investment in all other renewables in the rest of the region. So that tells you that's an area to really look at carefully. And then, as I said, solar in the rest of the region as well, in Chile, certainly, in Colombia, in Peru, I think are the right places. At a second level, I think wind is still a great opportunity in Latin America. And to close, although I see these not for today, but certainly for future years, I also think that green hydrogen is going to be an opportunity in the region. Brazil has many of the attributes that you look for in a place, in a country, to develop that kind of projects. Chile is certainly doing a big effort to position itself as well to facilitate, to create the conditions for successful green hydrogen projects. I've also seen efforts in Colombia. But again, summarizing, I think today in the region, solar distributed is number one, solar not distributed number two, wind number three, and green hydrogen number four.
Great, thank you so much. Our time is up, so I'd like to thank you both, Malcolm and Victor, for sharing your valuable insights and expertise today. We appreciate both of you joining us today and answering some of the questions that we have gathered about the topic. And we're definitely looking forward to more insights from you at the upcoming Global Energy Week in London. So, dear audience, to register for the event, you can find the link in comments. And I also would like to take this opportunity to invite all of you to our next episode dedicated to Mauritania's gas industry that will take place on the 21st of May. So stay tuned for more webinars and events, and speak soon.